we can see is this daily candle swept the high of the previous day, and in extension took out the swing high points. So we have the rate of the buy side liquidity sweep, and you can see that the daily candle volume closed below the previous day high points, and in extension this swing high points. So if you've watched the theoretical episodes on how we practically explain how to establish daily bias, then you must understand that now we're expecting to see bearish movement of price to the downside, where this becomes our drawn liquidity, this daily candle low. Since what we have is this daily candle took out the buy side liquidity of the previous day, failed to close above it, closed below it. So we're expecting bearish move based on the daily profile. And when you're looking at it from a market structural perspective, we're looking forward to see that the market will take out this sell side liquidity. So previous day candle, which is this daily candle low, becomes our next draw on liquidity. Welcome to the Next Well Trading Hub YouTube channel. In the previous episode, we practically looked at how to establish daily buyers in different market conditions. In this video, we are going to look at practical real-time chart examples utilizing the lower time frame for trade entry zones. To have a better understanding of this episode, you can do well to go through the previous episodes. The links are made available in the description section of this video. So guys, without wasting much of our time, let's head to the chart to look at how to trade this daily buyers in the lower time frame. So this is Euro USD and this is the daily time frame. What we can see is this daily candle swept the high of the previous day, and in extension took out the swing high points. So we have the rate of the buy side liquidity sweep, and you can see that the daily candle volume closed below the previous day high points, and in extension this swing high points. So if you've watched the theoretical episodes on how we practically explain how to establish daily bias, then you must understand that now we're expecting to see bearish movement of price to the downside, where this becomes our drawn liquidity, this daily candle low. Since what we have is this daily candle took out the buy side liquidity of the previous day, failed to close above it, closed below it. So we're expecting bearish move based on the daily profile. And when you're looking at it from a market structural perspective, you'll be looking forward to see that the market will take out this sell side liquidity. So previous day candle, which is this daily candle low, becomes our next draw on liquidity. Since we have the sweep of buy side liquidity, volume closed below the high of the previous day, and in extension the swing high points. Then you now go to the 1 hour time frame and you establish your entry zones from the 1 hour time frame. So guys, let's check the 1 hour time frame. This is the 1 hour time frame. This is our daily high and this is our daily low. So we have to identify the internal range liquidity, since we're looking forward to see that the market would take out the external range liquidity, which is the daily low points. So what we can see is within that range we have, this is the buy side liquidity. We'll be looking forward to see the pullback of price to raid this buy side liquidity. Then we have the bearish continuation of price to the downside to raid the previous day low points. So above the buy side liquidity, which is the internal liquidity, you have to identify the sponsorship zone. And here we have this order block. So you can see this is our order block. So we're expecting the pullback of price to mitigate the order block, and then we frame the bearish continuation. Another tool you can make use of for you to build more confidence to where you're expecting your zones to be mitigated, you can make use of the flip tool. So we flip from the high to the low points. So since we're in a bearish market condition, you're expecting a pullback into premium and then the bearish continuation of price to the downside. And you can see that the order block is within the premium zone. And in confluence, you can see that this premium level is also in confluence with the mean threshold of the volume of this bearish order block. So meaning we can execute our entry from this premium level and the stop loss above based on the 1 hour time frame. But what you can see is that the range of your entry to the stop loss is quite huge. Then you can now utilize the lower time frame like the M15, M5. But for this particular video, we're going to make use of the M15. In the coming episode, I'm going to explain more on how to redefine your entries in far lower time frames. So guys, let's go to the 15-minute time frame. So here we are in the 15-minute time frame. So I've separated this into session, the London, New York session, using the New York time zone. So what we're going to see is here we have in confluence to our order block, we can see it here in the 15-minute time frame, this 3 up close candle before the bearish movement of price to the downside. And you can see in confluence to this premium level, we have the fair value gap. So our entry can be placed from this premium level and the stop loss above the high of this bearish candle that created the fair value gap. Since we're not expecting to see that the market will fill up the fair value gap and continue upwards, so we're expecting to see that the market will mitigate the fair value gap, and then we have the bearish fall of price to the downside. So the swing low of the daily candle becomes our target. So now you can see we've established our entry by redefining it in the 15-minute time frame. We have our 1 hour buy side liquidity that we identify. So let's do away with the flip tool, and let's also do away with this order block zone. So let's play price to see. So now what you can see is this red line signifies the 12 a.m. New York time zone, and this is the 8:30 New York time zone. So now we have the London session giving us a bullish movement of price. The London session based on the New York time zone begins from 2 a.m. through 5 a.m. So now we have the London session trading to the upside. So we are expecting to see that this will raid the buy side liquidity. Since London session is giving us a bullish move, then we should expect that the New York session should give us a bearish movement of price to the downside. So two sessions can be bullish and one session ought to be bearish. Two sessions can be bearish, one session becomes bullish. We can see that the Asian session gave us bearish, the London session is giving us the bullish. So we should expect the New York to give us the bearish. Now you can see that the London session gave us the bullish move, price fell. Now this is New York session. So this is the open price at 8:30 a.m. New York time zone. So we can see how price traded to the upside into the fair value gap. So let's expect the bearish fall of price to the downside. Now, what we are going to see is that price fell to the downside. And here we have the Asian session starting already for a new day. But you must understand that we're using the 12 a.m., the New York time zone, to identify when we are in a new day. So though here we have the Asian session as begin, for this period, here is the open and here is the close of that day. But we're making use of the 12 a.m. New York time zone. So now we'll be expecting to see that once price reaches this 12 a.m., then we'll establish the previous day high and low. So let's play price to see. So here we are. Price is now at the 12 a.m. time. So what we can see is that now this day created, this is the high, and now this is the low point. So now we're in a new day. So price have not taken out the previous low point we've been expecting to see that the market would take out. So since we can see that price is not trading towards the buy side, then we should know that price is being drawn to the sell side, to the previous day low points. And what you can see is that these have built up another liquidity to the downside, another sell side liquidity. So we're expecting to see further bearish move, even though this particular day did not raid out the previous day low points. Now here we have the open price at 12 a.m. So we're expecting to see that the market will trade to the upside. So we have to identify where's that liquidity. So here's the buy side liquidity. So we'll be looking forward to see that the market will take out this buy side liquidity and continue bearish to the downside. And in confluence, right above this buy side liquidity, we have this order block here. So the market may mitigate this order block. And then we have the bearish continuation. So now you can see that price return mitigated the order block, though we had a purge of the stop loss if we're taking an entry here. And now we can see that the market fell to the downside during London session. So price have not yet traded into New York session. So now we can see that the market took out the previous low point we've been expecting to see that the market would raid. So you guys have to understand how to trade this. So now let's play price to see how the New York session is going to deliver. So you can see now price took out, this is the high of that day. This is the high. And here we have the low of that day. You can see how the market came to the downside, took out the low. And in extension, the previous day low we've been expecting to see that the market would raid. So now we have the fall of price to the downside. So let's keep playing price to see. So London session took out this day low points, and in extension, the expected low points that we've been expecting to see that the market would raid. So let's play price to see. So what we can see here, we are in the New York session. So London session gave us this movement that took out this low. So we could see New York session trade to the upside before for the bearish continuation. So let's establish the high and the low of this day. So let's play price to see. So now what we can see here is this is the high of this particular day. So this is the high. This is the high point. And this is the low point. So since we are still expecting bearish movement, since we're seeing that the market is taking out the lows. So now this is the high we have for this day and this is the low. So we'll be expecting to see now that the market will pull to the upside and then mitigate this fair value gap, because here we have buy side liquidities. We have this trend line liquidities here. So we're expecting to see that the market will purge this trend line liquidity, and you can make use of the feed tool from the high to the low. And you can see here we have, this is the premium zone. So we can now place an entry from the premium zone, which we can see this fair value gap. And then we have our stop loss right above this all close candle before the bearish move. Now we'll be looking forward to see that the market will take out the low of this daily delivery. So let's do it with the fib tool. So let's play price to see. Now you can see how price return mitigated the fair value gap. Now let's see if price is going to deliver to the downside. What you can see is now the Asian session traded to the upside. You know, this is the completion of this daily delivery. This is a new day. This is the Asian session. Activated the trade. But you know, the London session should also possibly return to the upside before the bearish continuation. So let's play price to see. Okay. So here we can see that the Asian session actually traded this to the downside and then took out this low point. So in confluence, we have the overlap. You can see the momentum of price to the downside because this is the opening price at 12 a.m. So price traded above the opening price and then gave the bearish continuation to the downside. So let's play price to see what happens next. So the Asian session created this high point. We have this order block here. So if you had missed this entry, you're going to see that now the London session and the Asian session overlap gave us this movement. Now the London session sponsored a bullish movement of price to the upside. And what you can see is this is your buy side liquidity. So now you can see that the New York session returned to the upside, mitigated the order block created during the Asian session, took out the Asian and London overlap buy side liquidity. And now we're seeing that the market is falling to the downside. So let's play price to see. Now we can see that price fell to the downside further. So let's play price to see. So now for this day profile, now we're going to identify the high and the low. Now this is the high market created. And now here we have the low. Because you can see now we are in a new day. This is the Asian session. So we'll be expecting to see that the market would take out this buy side liquidity in the London session or the Asian session. And then we have bearish continuation. So since we've identified the internal liquidity, so this is our sponsorship zone. So this is our order block. We'll be looking forward to see price return to mitigate, and then we have the bearish continuation. So let's play price to see. So now you can see that this is the Asian range. You can see how the market is consolidating. Now we have, this is 12 a.m. Now we are in the London session. So we could see this push to the upside, and then we have the bearish movement to the downside. Awesome. So now you can see how price return mitigated this sponsorship zone. So let's play price to see how it falls. Now you can see now price during the London session returned to the upside, fell to the downside, took out the previous day low points. Now we are in the New York session. So the New York session may give us a bullish move, and then we have bearish continuation. Awesome. So you can see the New York gave us bullish and then give us the bearish also. So this is the London New York overlap. So give us the bullish, then the New York sponsored the bearish movement of price to the downside. Price took out the previous day low during London session, and then we have the overlap give us the bullish and then the continuation to the downside. So this is how you want to be trading based on the daily buyers.